The following is a presentation of TFNN, The Trader's Edge, with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the April 23rd terrific Tuesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today, folks. My outcome, as always, is to help you to become a better money master, but mostly to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is really what it's all about. So let's go look at one of our tools. This is the tool I call No One Knows What He or She Can Do Until They Try. You know, Robert I, King of Scotland, struggled to protect his kingdom against the invasions of the English. There came a time when he was driven from his castle and forced to flee, and to keep from becoming a prisoner, he took refuge in a cave where he suffered from depression and uncertainty of things to come. Robert I felt as if everything was lost. As he sat dejected in that cave, he spotted a tiny spider spinning its web. Time and time again, this spider attempted to spin its web. It paused, and then it remained still for a few more moments, but it started again. It had another effort that it put forth. Finally, after repeated failures, the spider succeeded and the web was completed. Now, in the process of watching this spider, Robert discovered three outstanding characteristics of this spider. Characteristic number one, it had tremendous patience. Number two, the tolerance that it had. And number three, and most important, its perseverance. The spider never gave up. So King Robert, he took the time to clear his mind, began to concentrate more objectively and logically on his current state of affairs, and lastly, he determined to make every effort to regain his people and never stop until that mission was accomplished. Robert I persevered and moved consistently toward his dream, and in 1328, he got the English to recognize Scottish independence. Folks, each of us possess these same three characteristics: tremendous patience, tolerance, and our perseverance. You know, Winston Churchill once said, "This is the lesson. Never give in. Never, never, never. In nothing, great or small, large or petty. Never give in, except to convictions of honor and good taste." Folks, no one knows what he or she can do until we try. Let's go check out these markets. Let's go see what they're going to do out here right now. We've got the Dow futures up about 68 points, trading at 14,567. The S&P futures trading up 6 points out at 1562. NASDAQ up 16 points out at 2813. And the Russell 2000 up about 5 points out at about almost 917. King dollar, we were talking about King Robert. Well, the king is on the move here. We've got the king up about 31 ticks. That's all really about the currency market. Well, it is only about the currency market. So we'll go take a look at that. We'll take a look at the euro. The euro here having a little bit of a follow through to the downside pattern. So we'll take a look at that. We've got gold trading off about $3 out at 14.17. Silver out at 22.87. That's off almost 2% this morning, down about 45 cents. Light sweet crude down $1.10, trading out at 88.09. We're going to take a look at copper this morning. Copper up against a hammer candle. We'll see if that level is going to hold. Thus far, it looks like it will. That could be a little bit of a heads up out there. If we take a look across the pond here, they're having a party over in Germany. The DAX is up 131 points, nearly 1.7%, and the FTSE up really about the same percentage-wise, up 100 points. Over in Asia last night, they did not have a party. In fact, you had the Hang Seng was off 237 points, a little over a percent. Shanghai down 2.5%, a little over 2.5%, off 60 points, and the Nikkei down just slightly, off 38. Our call-in number is 877-927-6648. Give us a call, folks. Would love to talk to you about your stock or anything else that you'd like. Let's first start off by taking a look at the ES Mini. Let's put the 30-minute chart up here. The Bears really showing up for work here at about, as we came into the 9 o'clock session, it was really the Bulls, though. They showed up for work here real early this morning, about 6 a.m., so they had their alarm clock up. They got up and they pushed the market up from about a price point that dipped down to about $27.85 at around 5 a.m. and push it up. If we take a look at what the I've got the NASDAQ futures up here. Sorry about that. So we're taking a look at the NASDAQ futures. Excuse me. Let's take a look at some of the patterns out here inside the 30-minute chart that we're looking at. NASDAQ futures, you can see, made a 1 to 1.272. A to B equals CD down. That was coming off of the highs at 1:30 or so, 1 o'clock in the afternoon on April the 10th. That was your A point. Your B point was the low put in at 5 p.m. on the 15th of April, made about a 0.618 retracement up to the level at 4 p.m. in the afternoon on the 16th. Goes ahead, makes a 1 to 1.272. That low that it made was on 3 p.m. in the afternoon on April 18th, out at 27.24. Now, if we just take a look at that C to D leg, that's what we're looking at here right now. What we can see that the NASDAQ futures have done is they have made a 0.786 retracement. Let's go see what the retracement is of the entire move of that A to D leg out here. We'll go ahead and put that in a little bit thicker paint out here. We can see that is above the 0.618 level. So NASDAQ futures could easily go ahead and move up to the 28.29 level. If we see what is up there, that would be the 0.786 retracement of that A to D leg, and it would also be a 100% move of a move. Again, what do I mean by that? Well, if you just simply come and take a look at the NASDAQ futures, what you can see is that point that we're using for our C point, for our A to B equals CD down. That's where we see a significant change in trend in the marketplace. Therefore, that being the swing point, a key swing point, that would be a 100% move of a move. So it looks to me like that's what the NASDAQ futures want to do, move up to that 28.29-ish level. We can see here that the market got into the overbought condition as it moved higher in the 8 a.m., 9 a.m. Time frame. So the bears coming to work, the bulls taking a little bit off, but not really that bearish. Just simply you expect the market to either move sideways or pull back in order to work off an overbought or oversold condition. Right now we're looking at the overbought condition. Let's go take a look at the Dow futures. Right now we've got the Dow futures trading up about 72 points out at 14,571. What have the Dow futures done? Well, you made that nice hammer candle here yesterday morning. That was done at 11 a.m. 11 a.m. you make that nice hammer candle. A little bit of a head fake here during that 11:30 session, and boom, a nice bullish engulfing candle. So you had two nice candles as you're coming into the oversold territory. That's a positive thing for sure. We can see here last time we saw the Dow in the oversold territory was at about 11 a.m. on April the 19th. That was on Friday. Made a nice little bullish engulfing candle there as well. So now what the Dow futures have completed is the 1-to-1 A to B equals CD. Dow futures got up to a high at 3 p.m. yesterday out at 14,527. Made a pullback into 5 a.m. this morning. If we take a look at that retracement would be our A to B leg. You'll see 14,445 is the exact number of the 0.618 retracement. What did the Dow futures actually get down to? You got to love this, folks. 14,444, off by $1 on something trading with a value of $14,000 out there. 14,000. You got to love that. Makes that 0.618 retracement, and then boom, little bullish engulfing candle. In fact, as you came into that 5:30 session, goes ahead and completes the 1-to-1 A to B equals CD. A little bit slightly below the 1.272 expansion of a set of swing points. You know, you can see I would use the 2200 hours, so that is what, 8 p.m. in the, no, it'd be 10 p.m. in the evening. I know it's easier just to take 24 minus 2. That would be easier. And the 1.272 expansion right around 14,592 if the markets do. And you can also see here on the 30-minute chart how the market got into that overbought condition. So right now maybe moving sideways here a bit to work that level off. 14,592, 14,613 most certainly in the cards for the Dow futures. Let's go take a look at the ES Mini. I did start off saying we were going to look at the ES Mini, and I gave you a little head fake out there. The ES Mini out here forming a number of A to B equals CD patterns. Right now it's made about a little over a 0.786 retracement off of its last major swing point. That was the Gartley sell pattern that took place at about 4 o'clock, 4:30 in the afternoon on April the 16th. If you go from that high, which is 1570, all the way down to the low put in at 3 p.m. on April the 18th. You'll see that you're pretty close to just above the 0.786 level. We also see here all markets here working the same. Some bears showing up for work, but not enough bears here. Again, the ES Mini, all of these are in the overbought territory. That does mean we'll see the market maybe punch higher, but then start to either sell off or move sideways in order to work off that condition. Where is it that the ES Mini could easily travel to? No reason for it to not make a 100% move of a move. The question is going to be, is that going to be at the 1570-ish level? Or is that going to be all the way up here at 1577? That takes you all the way back to April 15th at about 9 a.m. when the market started to really move down lower out there. If we take a look at the larger A to B equals CD pattern out here, the larger A to B, we'd go ahead and use that swing point low that came in at about 3 p.m. on April the 18th out at 1530.75. That's going to be our A point. Our B point out here that we're going to use is the high that came in at 10 p.m. on April the 21st. That level 1557. Your C point was yesterday as we were on the air coming in at about 11 a.m. as the ES Mini moved right down in that 1542.75. A 1-to-1 A to B equals CD now takes you up to 1569. But it looks like to me that retracement there is probably only about a 0.382. That says 1576 is in the cards. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is better when we're together, folks. Let's go take a look at some of these stocks here in the pre-market. It is earnings, big earnings a week out here. In the aftermarket from yesterday, you have Illumina, ILMN. That's up 9% this morning. Last trade fired off at 60.20. They close at 55 and a quarter. You've got Netflix up 23% this morning. They closed at 174.37. Last trade firing off at 214.70. Texas Instruments, TXN, they closed at 34.81. They're trading up a little over 1% this morning. That's up 39 cents out at 35.20. Veeco Industries, VECO, we've taken a look at this on this show here. Up 13% this morning. That's up $4.32. Last trade firing up at 36.55. I've got that stock up on my screen. We'll go take a look at that. We know Veeco has been traveling in a sideways consolidation since August of 2011. So that is a large consolidation. We'll see if it's going to break that area. We'll go take a look at that in a moment. We've got... let's see, ARM Holdings up 8% this morning. They closed at 40 and a quarter. They are trading at 43.60 right now. We have Coach, COH is the ticker symbol. They're up a nice 11% this morning. They closed at 50.59. They're trading at 56.34. I don't show a lot to the downside. United Technologies up. United Technologies is down slightly, off 63 cents. They closed at 93.63. They're trading out at 93 out there right now. So let's go start taking a look at some of these stocks out here. Let's take a look at Veeco Industry. If you are watching us on Tiger TV, thanks so much for doing that. Maybe you're listening on your mobile device or the radio. Thank you for doing that. Remember, you can always catch the live stream of this show by going to the homepage of TFNN.com. Over on the right-hand side, you'll see the box with the 3 smartphones. Click on that. This will stream live to your smart-type device out there, and the archive is always on Channel 9. Now, if we take a look at Veeco Industries, you can see the consolidation pattern. The high of that consolidation, we're going to call it right around the 38 level. So right now, what we know in the pre-market, it's trading out at 36.75. So has not busted through that consolidation. Long-term consolidation for sure. The low of that consolidation here, where we're looking to actually buy this, was in the $26 area. So you're going 26 to 38. So you got a nice little $12 consolidation. The last time that it was up there with this high volume high, March 25th. So today's going to give us a lot of information here as to whether or not, number one, it's going to trade up into that level, because the low of that's 36.45. It's trading right now at 36.75. So you've got some folks there that may want to just simply get their money back because they thought it was going to break out, and they didn't actually wait for it to break above the consolidation level out there. Of course, we know that that's not the case. You want to make sure you break the consolidation with volume out there. Of course, we watched this pull back. It pulled back on lighter volume, but still was not able to hold that open window, that gap up from March 22nd, which had 329,000 shares. So we'll see how this trades, but right now, still having not broken out of the consolidation, our desire was for this thing to move all the way back down to the bottom level around 26. You can see here from an overbought, oversold condition, it was getting down towards those levels of being oversold. Didn't totally get down there, but that's the way that it is. Let's go continue taking a look at some of these stock charts here for the pre-market. Let's take a look at Coach. That is having a nice morning. Of course, this thing here had the feathers knocked out of it not too long ago. Let me get rid of some of the things here on the chart. Let me just refresh my screen, make sure we've got all of the active data out here. Also go ahead and let's take a look at the relative strength weakness. So we've got Coach. COH is the ticker symbol. Let's see, their operating income was $348.4 million versus $337. Nice job there. Their net income $238.9 versus $2.25, and revenues, net sales for the third quarter $1.18 versus $1.1 billion out there. I believe they might have also increased their dividend here. Where is that? Well, I don't see it, but let's go take a look at the stock chart because they're up a nice, healthy, where's Coach here, up a nice, healthy 10% this morning. So last trade, firing off at 55.85. So 55.85 was the last trade. Of course, the bottom of the gap out here is 59.86. So this has, instead of a breakout, this is a breakdown session here. If we were grooving and moving to the music, we would be doing the breakdown. Well, this did the breakdown right here, 59.86 on January 22nd. This moved down with 50 million shares. This might be a selling opportunity more than a buying opportunity. We'll see what kind of volume we have inside Coach as it trades today. 877-927-6648. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
We're off to the races. We got the Dow up 78 points, trading out at 14,643. S&P up 8 at 1570. Composite up 21 points, trading at 3254. Small caps leading the charge to the upside, up $6.70, trading at 921. Google up $3 and change. Apple trading out at 404, almost 404, up $4.80 or so. To the downside, you've got Microsoft down 14 ticks. Rent-A-Car Inc. RCII out there down 6% this morning, off $2.20. Inter Oil Corp, IOC, is off $2. Polaris Industries, PII. Looks like you don't want to have a double I in your ticker symbol this morning. They're down $1.56, off about 2%. Rand Gold Resources, GOLD, off about 2%. Brinker International off $1.55. Baidu down $1.14. Viacom off $1.21. To the upside, it is Netflix leading the charge. They're up $38 and change, up a whopping 22% this morning. Illumina Inc., ILMN, just behind them, up $6.30. That's up almost 12%. Vico Industries trading at $37.43, up $5. That's up 16%. Coach up 5 1/4. That's up 10%. Then you got Apple up $5. Pentair, PNR, is the ticker symbol. They're up 7% this morning, up $3.40. Lockheed Martin off $3. ARM Holdings, ARMH, they're up about 7% here. And Lexmark International, the printer company, LXK, they are up 10% this morning, up $2.64. Toll Brothers up $2.63. I haven't looked at the Toll Brothers chart in a while. I suggest that we do that today. They're up a nice 8% out here. Let's first go take a look at copper. Why are we going to take a look at copper? Because copper has truly been getting the kibosh. It has been getting hammered out here. And speaking of hammers, the copper contract, I've got the continuous up on. No, I don't have. I've got the actual. I've got the actual May contract. If we take a look at start off by taking a look at the May contract, produced a nice hammer candle here on April the 18th. Now, what I like about that here this morning is the mere fact that the low of that was tested. 306 was the low of April 18th, and today it got down to a low of 306 as well. So that level has been tested. That's a beautiful thing. You know, your ideal ideal spot to actually be buying a hammer candle. And you can see here that certainly copper is in the overcooked, and I mean oversold condition. You like to be able to buy from the bottom of the hammer. Why? Because you get a close below it. It tells you were wrong on the trade. So there's nothing like being able to have your back up against the wall. And a couple, I guess there is an ETF that Z in the Den came up with for us called the letters are JJC. So let's go take a look at JJC out here. He says it tracks very tightly to copper. So if we take a look at JJC right now, it's trading out at $38.60. Let's go see what kind of liquidity we've got inside this here. So if you take a look at yesterday, not a lot, 39,000 shares, so you couldn't get carried away on this for sure. 60,000 shares on April the 19th, that big volume day, 200,000 shares. So not a ETF here that has a lot of liquidity. But if you were interested in going ahead and trying to take a long position in copper, I would say at the end of the day, at the end of the trading session, that would give you an idea as to whether or not you would want to do that. Now, what you could do is you could look for some other reversal candle as well. You could look for that tomorrow. If this is going to bounce, let me go back to the actual contract here. What you would be taking, and what might occur today, right now, if the contract were to close, we would have our second hammer candle down at that 306. That's important. It's always important to be able to identify where the battle is being fought. And that battle being fought here, you want to understand, and it's easy to identify where the bulls are really taking their position. Well, you get two hammers. You get two hammers, in essence, defending the same position. Then it becomes very clear. It doesn't mean that they're going to be able to win the battle, but it is where your back would be up against the wall. So I would suggest this, because if you're going to get a bounce out of this, you're going to get at least a dead cat bounce. I would take that off of, let's take the most conservative approach. You would use the swing point from April the 9th out here. That high was 345, and then we'll go back to the ETF. That would take you up to about 330. So let's go back to the ETF. We'll go ahead and use the same candle, April the 9th out there, just to see what kind of risk-reward you might get here. JJC, so we're going to use the April 9th candle, that session here. You're looking at least a 0.68 retracement, so that gives you $41.42. You'd use a relatively wide stop on the entry, but you would tighten it up once it started moving in your direction, or the way that you would actually trade this would be a close below 306 on the futures contract. Then you would go ahead and get out of Dodge. But it's at 38.60 right now. 41.42 would be your first target. Your second target would really be coming off of the swing point high here, right around February the 1st. Again, I'm on JJC, the ETF out here, all the way down to the lows of today, and your dead cat bounce of that takes you up into the 42 level, which is also the 0.786 retracement off of the April 9th area out there. So that is on copper. We'll pay attention to it, but nice to know you've got a couple of hammer candles out there. Let's go to Tom in Tampa. Tom, thanks for calling. Thanks for holding. How are you this morning?
Hey, doing good, Steve. How about you?
Excellent. Thanks for asking. You wanted to look at the Queen out here, I believe. Yeah. Tell us what you're looking at. Are you in a trade? Looking to get in?
I shorted it Friday morning there around around 1.29 or 1.3094 in that area.
Okay.
I covered it this morning around it's 4:30, 4:45. That baby I looked up and boom, I just jumped over there and took it. It's a nice fat little profit in a day,
Yes.
And I was wondering, Steve, it took out that 1.2981 area. What kind of a retracement backup you think we might get on this? And because it's bounced off that a little bit.
Yeah, here's what I would be looking at. So a couple of things. Number one, I'd be paying attention to the candle session from April 17th. That body is very important. Now, the close of that body is 1.3032. The reason why that is important is because what it has done so far today, it has created that continuation candle, and that is a falling three pattern. See how you've got you've had three small bodies trading with inside the body of that down thrust from April the 17th. Look, most candlesticks are reversal patterns. You've either got new neutral candles, candles that really don't mean a whole lot, but they sound kind of cool. And then you've got reversal candles. The reversal candles, the only way those really become continuation patterns is when you break above or below a support level. So it's another way of taking a look at continuations. But the real continuation candle that's out there is either the rising 3 or falling 3. And that's where you want to really be paying attention to small-bodied candles that are trading with inside a larger candle out here. And so right now, if the euro closes out the session below 1.30 even, we're going to call it, you may not get any more of a bounce than what you've received today.
Mm-hmm.
Okay, so you may, so you can play this a couple of different ways. You can play this as if you do get a retracement, and that retracement that I would be taking a look at, I'll go to the 30-minute chart here, but let's just do it off of this daily, coming off of the April 17th high to this morning's low, and you would be looking at probably the 0.618 level. So right around, looks like right around, let's use, oh boy. I can't really read that very good. If I can't read it, you can't read it. I'm going to do it on a short-term chart. It's going to be right around 131.13, somewhere around there. So that would be if, in fact, you close back above 1.30. I'm sorry, the close is 1.3032. If it doesn't close above that, there really is no support on the euro until it comes all the way back down to the bottom. And that bottom level really being the swing point low from April 4th out there. So that's the current setup. If I go put this on a 30-minute chart out here, on the 30-minute chart, it's neither overbought nor oversold. If we come off of the swing point high out here on the 30-minute chart, that would be at 3:30 in the morning this morning. Down to the low, the 0.618 tracement there is probably 1.3040, right around there. So that's you got, but I don't know if it's going to be able to bounce back up here. We certainly have some, we've got strength in the dollar, weakness in the euro. Bonds were moving higher when I looked earlier this morning. The market's moving higher, so there we've got divergence in the market for sure. But that's what I would be paying attention to on the euro. I'd really be paying attention to that daily chart out there to see if it closes below and gives you that falling 3 continuation pattern. All right.
Okay. Great. Sounds good, Steve.
Hey, you bet. Thanks so much for calling. Thanks so much for listening.
Thanks.
Let's go. So let's go take a look at some of these stocks here, popping and dropping. Everybody's got interest here in Apple. That's up $2 this morning, trading out at 400. So let's go take a look at Apple, see what she is doing here. Now we know we've got Apple out with earnings after the bell, so it should be a aftermarket wild ride out there. But let's go take a look at it, see what it has done so far. At this stage here, what Apple did yesterday, let's take a look at the bounce yesterday. Volume-wise, nothing in it. 15 million shares to the upside, so certainly no conviction to the upside yesterday after making a low on Friday with 21 million shares and having a little bit of a down thrust of 23, and the bigger down thrust was 33 million shares on April the 17th out there. So really not outside of the body. This is not the same type of continuation pattern at all, but quite frankly, until it actually just gets beyond the body of the candle session from April the 19th, you don't have any kind of, I couldn't even try to stretch a bullish candle signal here on Apple. Maybe what you see here today more likely is at least another test of the low of April 19th before Apple before the earnings release coming into the bell. That to me seems like more likely the play out here. With the composite being up 25 points, 0.8%. Apple, should really have had some juice here. So what you can see is in a equity where you used to have everybody looking to get into it. Right now, what the market is communicating to me, at least, is that nobody's really willing to get in here just yet. They want to see how the market responds after the earnings release out there. So no real news here in Apple. Let's continue looking at some of these stocks here that were out with earnings before the bell or after the bell last night. How about we take a look at Illumina? ILMN is the ticker symbol. So let's go see what that is gapping up certainly this morning. And then we'll go back and take a look at Coach, see what it is doing. So Illumina, now that has got some additional momentum in it since it's open out here. Let's go see what this is trading into. Okay, so this is going to trade into a gap down area. Let's put the lines across our screen here. We'll go ahead and we'll put that in black. That is coming into this equity here, gap down on July 27, 2011, 10 million shares down there. So in the first, let's see, we've done 17 minutes of trading out here. It's done about 2 million shares, so it's got some nice volume here today. Again, that is going into the actual breakdown session of 10 million shares. Now, it has not gotten up to that price point, and that price point being somewhere right around 63.50. So this is really going to be the second test of that area here. That first test really took place a few trading sessions later, like on August the 1st of 2011. There was 3.8 million shares going against the breakdown of 10 million shares. So it wasn't enough to go ahead and bust it up. If, in fact, you can get Illumina to close over about, what's the price here again? That would be around 63.50. That would set up a run to the session where it actually broke down from on July 26th, right around the 68.35 level out there. So that is what Illumina is doing. Let's go back here real quickly. Take a look at Coach. COH, you can see here, really just trading inside the gap. Volume right now in 18 minutes of trading, 5.9 million shares, and we know that's going into a downdraft of 50 million shares. So not too bad from a volume standpoint. You want to come back and take a look at this and explore this at the end of today's trading session. Vico, we were taking a look at Vico. You can see right now that's trading up into the gap out here. Has some good volume so far, 717,000 shares. Remember, we got that high volume test of the consolidation area, and it wasn't able to break through that. And that alone was telling us something about this equity. So we'll see if this thing can close. Today would be the day now, because we've had a real first attempt, a failed attempt, on March the 25th with 4.2 million shares. That should have had some additional momentum on the following trading sessions. It did not. And so if this thing can close above 38.46 today with volume, then you would be taking a look at a potential real breakout here. And that would be a nice breakout. If we just simply take a look at, I'll use my yellow box technique out here. That's just the easiest. When you break a consolidation level and you do it with conviction, what it says is you're going to do at least the same amount to the upside or downside, whichever way it breaks. In this case here, you can see that would take you all the way back to the area where it had broken down back in the time frame of June of 2011. We get you right up to about the price level of $49.78, but not, as my friend Lee Corso likes to say, and I'll tell you, not so fast, folks, because Vico has not broken out. Dow's up 113, S&P is up 12. We'll be right back, folks.
Yeah, it's always better when we're together.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
That it is, my friends. Dow's up 120 right now. S&P is up 12. Gold down $12 and change. Silver off 48 cents here. We're looking at the King Dollar, U.S. Dollar Index here. Looking at the weekly chart. Still that Gartley sell pattern, that 0.786 Gartley sell pattern, that has been in place. We know the U.S. dollar index continues to try to take that out, and it keeps running into horizontal resistance. That resistance line going all the way back to that bearish engulfing candle from August 27, 2010. That was the week that QE2 was announced out there. So for everybody, you know, Tom talks about the when he gets upset when people talk about the U.S. dollar was trashed and all the quantitative easing impacts here. That week, August 27, 2010, was when QE2 was announced, and we're all the way back inside that candle, or very close to it. The low of that is 82.67. You're at 83.01, so you're already inside that. So that also is a resistance area, and you break that resistance, it will then become support, and that is 83.64. So far, has not been able to break through there. Let's take a look at the gold contract here. Right now, gold is back $15. This is kind of a cool chart, or at least I consider it to be a cool chart. This chart here tells me that, number one, that gold is going to form a bottom. That's just not there just yet. We take a look. So one of the things that I track for different commodities, sometimes currencies as well, and take a look at the correlations, is the CFTC Commitment of Traders data. Now, that data is available to everybody. You can just go to the CFTC site. I just put in CFTC space COT, and it'll take you to the page where you can download the historical information. I believe it goes back to 2006 or so. And what I've got out here is I've got in the bottom of my gold chart, this is a weekly chart that we're looking at. I've got this broken down into two sections. So the top portion of this is really the commercials, the large commercials. This is the large money. If you like being able to follow the money, this is what you want to take a look at. And if we take a look at the large commercials, the interesting thing here, we saw tons of selling, and this actually, truly fits with exactly what Tom was telling us, that you had. The contagion was really the impact of, as gold was moving lower, they had to sell the GLD and vice versa on this, because the large commercials, if you were wondering who was it that was actually selling, it was not the large commercials out there. They basically maintained their same net short position, which has been one of the lowest net short positions that they have had going back to the lows out here. Back in 2008, I'll pull this chart back a little bit further for you, and we'll go take a look at that area back here in the 2008 time frame, when you have gold at the level right here at the lowest at the point in October 24th, 2008, when it was down at $681. The net short position of the commercials out there was $34 or 34.1. Just simply, that's a ratio as a percentage of their open interest. If we take a look at last week, it was 34.3 out there. And the week before, by the way, was 34.6. They did not. It was not the large commercials that were dumping their gold out here. They are still maintaining the position that gold is going to be forming a bottom out here. On the bottom here is the non-reportable group. That is a group of individual traders so small that the CFTC doesn't really care to categorize them as other than just simply non-reportables. They are at their highest net short position. They often get the trade wrong. Last time we saw them up at these levels was all the way back here when gold was forming a bottom back in November of 2008. Gold is something you're going to want to get into. It just may be a bit too early. Folks, if you're off to start your Tuesday, have a terrific Tuesday. I will look forward to seeing you in a few or tomorrow morning. Take care, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.